Hi everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is September 11th, 2019, and we are again in the final hour of the trading day. As you know, I believe the prices during the last hour of the market are the most valid prices to make your buying and selling decisions from, and that is because, in my opinion, the large financial institutions, the market makers, take control over from the algorithms and the day traders during the day, and they come in with volume. And in my opinion, they're the most well-informed and probably the smartest prices to hitch your wagon to as far as making your buying and selling decisions from. So that is why primarily I try to buy as close as I can to the closing price of the day. So yeah, so today's 9/11. Boy, I'll tell you, I remember I was I was trading back then in 2001 on 9/11, and I was watching CNBC in the morning when that all happened, and boy, that was crazy. For those of you who were not around or trading back then, the market closed, I can't remember now, but I think it closed for a week, and you're sitting there on long positions and the market's frozen, closed for a week. But yeah, it brought back some memories today for sure. So anyway, yeah, that was definitely a sad day. So anyway, on the bright side, we are having a nice day today. The Dow is up 139 points, up about 0.5%. The NASDAQ is up 66 points, up 0.82%. And then S&P is up 13.5 points, so up about 0.45%. So anyway, we're having a good day. I am definitely grateful for that. Yesterday was a red day, but we have made back up those losses today. So always thankful for that. So let me just make sure. Hey, Steve Burns is here. Hey, bud, how you doing? Steve says, yeah, you were right about 9/11, closed for a week. Yeah, that was something, huh, Steve? Yep, I have a feeling Steve was watching that as well. But that was. Can you imagine the market being closed for a week? Just had no idea. I think I do remember the Dow opened up 500 points on the first day they reopened, and then basically went up from that. But anyway, yeah. Hey, Steve. Hey, listen, I was going to write you, but I had somebody come over. But I was watching your newsletter last night, and right in the middle, you made a little mention for me. So thank you very much. I really appreciate that. That was awesome. I wasn't expecting. I was sitting there half asleep watching it, and then you made that comment. And I was like, oh, hey, woke me right up. So thank you, my friend. I truly appreciate that. Steve says, bulls are back in town. Love the VIX cross under and leverage ETF crossover. Yep, we've had these crossovers on the indexes, and we've had the cross under on the VIX. So that is a good sign that we have the confluence of these crossovers and unders at the same time. So anyway, thank you for coming, Steve. I always appreciate it, my friend. It's always an honor to have Steve Burns in here with us, and I'm excited, and I know everyone else is as well. Steve says, I support what you're doing 100%. Oh, thank you, my friend. That's awesome. Appreciate that. Thank you so much, Steve. So, all right. Well, listen, the plan for today, as always, we're going to go ahead and we're going to run the U.S. legal disclaimer. We're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them either to the upside or the downside going forward. Then we're going to do a few minutes on trader psychology. I mention this every day, but the secret sauce between winning and losing traders, in my opinion, is your psychology, how you deal with emotions, how you deal with fear and greed and frustrations, all the things that trading bring out in you. So I do like to mention it every day through some through some sayings on Twitter that I find, and hope that they're helpful for you. I hope that they're rubbing off. I hope you can internalize this, because it's true, everybody. It's important to learn the technicals. That is definitely part of the skill and the learning curve, but how you manage yourself not just manage your trade, is going to be important, because how you manage yourself, how you manage your emotions is going to translate directly in how you manage your trades. So, so we're going to do a few minutes on that. Then we are going to come back. We're going to take a look at all the positions I have in my watch list. We're going to go through each one, each stock one by one in the watch list, and we're going to take a look at support and resistance levels. We're going to look at all the technical indicators. And you know, the way I look at technical indicators is I don't look at them just as lines or readings on the screen. I look at them as groups of buyers. And so, you know, if you want something to go up, you want to be in the same group as other buyers. You want other buyers around you. And so, you know, if one technical indicator is a group of buyers, then 2 or 3 or 4 technical indicators lining up, or 4 groups of buyers coming in, is even better. You know, the worst thing you can do is buy something right at the same time where a lot of technical indicators are telling other groups of buyers to sell. So, you know, that's a key part of my trading approach, is looking for a confluence of signals on the indicator. So that's what we'll be looking for. So we'll be looking at moving averages, RSIs, MACDs, V1, V2 entries, divergences. So that's what we'll do. We'll go through each one. If something looks good, we'll check it off on the checklist, and then towards the end of the day, before the market closes, we'll refine those. We'll go back through, probably narrow it down to 1, maybe 2, probably at the max, and I'll enter that position at the end of the day, if we have something. And then after the market closes, if any of you have any questions about what I discussed today, if you need any clarification on anything, don't be shy. Just go ahead and type it in the chat and let me know, and I'm happy to try to clarify it for you. If there's any other part of trading, maybe even something that I did not mention that you would like me to elaborate on, I'm very happy to do that. That, I guess that will be it. So that's the plan for today. So, all right, well, hang on. I'm going to run the U.S. legal disclaimer, and I'll be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, well, listen, here we go. So let's get started, and we'll go through my current positions. First of all, we have DDM. So this has been a really nice trade. We bought DDM back here on the 26th of August. We bought it because the previous day we closed over the 200, and the day that I bought it, we closed over 200. So buying when the price goes from under the 200 back over the 200, and holding this until it eventually closes back below the 200 is a good, profitable, long-term approach to trading DDM. So this is a mechanical trade for me. I am going to stay in this as long as it stays over the 200. The only change that I make from the completely mechanical approach is I do phase out as it goes my way. I like to sell to people when they really want to buy shares. So not all of the position, just a portion of the position. So I have scaled out now, probably close to, let's see, 40, 20. I guess I should be able to do this in my head, but I can't. Yeah, I phased out of about 60% of this trade so far, from here all the way up to here. And you can see I did hit one profit target today here right at the top, 50.16. So this has been a really nice, great trade. Mechanical trades are easy. You don't have to worry about what the price action's doing. All you have to do is stay above it, stay in the trade as long as you're above your line in the sand. And the line in the sand for me now is the 100-day moving average. So I will continue to phase out of this to the upside as long as I still have shares. Until I'm out of shares, I mean, then I'll be done with the trade. Or I will stay in this as long as it stays above the 200. And so tomorrow, if it closed back below the 200, that would be a real bummer, right? But that would have to be my exit. But you know, as normal, the reason I like to phase out is because I have locked in profits at higher levels here, and the market can't take that away from me. Obviously, would I wish that I didn't phase out? Of course, because I would have gone from here to here, right? But I did phase out because that's my approach. But if we did have a big move down tomorrow, of course, I would be glad that I locked in profits up here. So this is my approach. It works best for my personality. Not saying it's the best thing to do. A lot of people do not phase. They just use one entry and one exit, and that's fine. But for me, the reason I choose to do this is because it allows me, it makes it easier for me to stay in trades and participate in large up moves, because, you know, for my personality, phasing out a little takes a little bit of the heat, a little bit of the emotion out, but I'm still, you know, the drawback to that is I may not make as much, but the positive to that is it keeps me in longer trades, and I think that makes up for it, because I probably would have sold back here. So that's one of the reasons I do like to phase. So anyway, really glad we hit one profit target here today. Currently, it looks like we might close over the third ATR channel. You know, whenever you get up to the third ATR channel, lots of times you're going to find resistance. But on the plus side, if it does close above the third ATR channel, it's very, very strong. It's showing that the market is very, very strong. MACD is positive. We're to 6182 RSI, so we're not extreme on the RSI reading. The MACD bars here have been very, very strong. So you know, this is looking pretty good. But again, this is mechanical. I'm going to stay in it, phase out until I'm out of shares, or unless it closes back below the 200. All right, so Google, I bought Google yesterday with the 10, if you guys remember, the 1030 SMA crossover. This is another good back-tested approach to trading Google long-term with long-term crossover approach. Because this is a stock, this is not a mechanical trade for me. This is a discretionary trade, but I use the 1030 SMA crossover as my entry, the mechanical entry. But after I enter it, I will manage this trade discretionarily. So, you know, the reason I don't want to just hold on to this as long as the crossover is in place is because then you're going to have to hold through earnings, and I do not like to hold through earnings. I think it's a gamble. So anyway, so back on this other chart, I did buy it yesterday at 1202.70, and I did hit one profit target today at 1215.78. Got a little higher, was approaching the second profit target, but didn't quite get there. Looks like we're having some issues with this high back here on the 9th. We did go up higher today, but then close back, or at least we're underneath that right now. So, you know, managing this going forward, certainly, you know, now that it's moved up a little bit, you know, once it starts extending away from my entry, then I start overriding the 1030 crossing back under. If I wanted to give it more room, I would just wait. But, you know, if we have another up day tomorrow, then I will start looking to trail my stop with probably, you know, possibly the 5-day moving average, or it closed below the previous day's low, because I don't want to give it all back. So, but as long as we keep making higher highs each day, you know, that's basically going to keep me in. If we get a close under the previous day's low, that's kind of a bad signal. Maybe closing back into the value zone, that's not such a good signal either, because now we are above value. So that's kind of the plan. That's kind of the plan with Google. And conversely, you know, if we got up here to the 70 RSI, rejected it, I would also lock in profits there. If we rejected the third ATR channel, that would also be a red flag. Also, if we came, you know, you can see the three lines here. Up here is basically the 6 ATR channel. My phasing out, if I got up to here, I'd be out of shares. The blue line is the 70 RSI. So if we got up to the blue line, rejected the 70, I would get out. And then I would also look for this previous high here at 1269. If we got up there, rejected that, that would also be a red flag. So that's kind of how I look at this. So currently right now with the 1030 EMA, we're not quite far enough extended in order for me to start trailing my stop. So to the downside, the 10 crossing under the 50. If we have another day up, another substantial day up, I will start trailing the stock and looking for a close below the 50, I'm sorry, below the 5 EMA or a close below the previous day's low. But it's up nicely today and did take off about 12% of the position. All right, so here are the cues. Again, I did buy the cues back on the 4th of September. I bought it when the 5 crossed over the 20 EMA. This is a completely mechanical trade, just like the DDM and unlike Google. This is a completely mechanical trade. I'm going to stay in this as long as the price, as long as the 5 stays over the 20 EMA. I will continue to stay long. I will continue to phase out until I'm out of shares, or to the downside, if the 5 crosses back below the 20, that will be my exit to get out of this position. But you know, this has moved up nicely since we bought it. We bought it back here on the 4th at 183.30. We're now at 192.01. I have phased out. You can see I did hit one profit target today. So I think I'm out of about 33% of this trade so far. So, you know, even if we go back down, I've locked in profits up here. The market cannot take that away from me, even if we come back down. And you know, if the 5 crosses back below the 20, that's my exit signal on the remaining shares that I have. Or if it continues to move up, I'll just continue until I'm out of shares. So, you know, these mechanical trades here with the phase outs are pretty easy. There's no discretion involved. You don't have to think about it, which is kind of nice sometimes, right? Steve says, phasing out equals regret minimization and works beautifully in swinging markets. Yes, I agree. You know, it's not the be all end all. I mean, like anything with trading, you know, there's pluses and minuses, but you know, I like to tailor my approach based upon how it's going to interact with me from a psychological level. And you know, that the best trading approach, somebody asked you the best trading approach. There is no best trading approach. There's a best trading approach for you, right? And so that helps with my trading approach, and that's why I prefer to do it. Steve Burns says, small caps and micro caps are up explosively today. Wow, glad I'm in UWM yesterday on the 200-day break. Oh yeah, that's right. So UWM is double leveraged Russell 2000, I believe, right? So Steve's having, whoa, Steve, I didn't realize it was up that much. Wow, 4.24%. So that's double leverage IWM. Unbelievable. Nice trade, buddy. Really nice trade. So let me see. You took that. Did you take that based on the close over the 200 UWM, or did you buy the UWM based on the close above the IWM? I think it was just straight over the 200-day on the, yeah, I'm pretty sure. Yeah, so you bought it yesterday. Nice trade, Steve. Wow, look at that. It's a monster. An IWC. Wow, big trades today for you, Steve. Nice going. Hey, what's Larry doing? How you doing? How did you get a partial position in Disney yesterday? Oh, did you get a partial position in Disney yesterday? I got out of Disney yesterday. I bought Disney back here on the 9th when we had the 10, I can't remember now. I think it was the 1050 crossover. It happened up here above the 1 ATR channel. So luckily, Larry, I only took a half position and then we untriggered yesterday. So I did get out for a loss on that yesterday, but again, it triggered over the 1 ATR channel. So I only took a half position. So I am grateful for that. So I did get out of Disney yesterday. Steve says, I bought UWM on the UWM signal. Yeah, okay. That's what I thought. That's what I thought over the 200. So, all right. So let's get to our famous SPY trade. As everybody knows, I do buy the SPY every single day, regardless of the technicals. I buy it each day at the close and I sell it first thing in the morning, regardless of what the technicals are. And you might ask, why would you possibly do such a thing? But this is based on a long-term back study from Liz Ann Saunders at Bespoke Invest. So here you have two options. The first option is you could buy the SPY at the open each day and sell it at the close each day. So buy at the open, sell at the close, buy at the open, sell at the close every day from 1993. If you would have done this, you would have actually had a negative 13.9% return. But if you did the opposite, which is what I do, if you buy the SPY at the close each day, sell it at the open each day. So buy at the close, sell at the next open, buy at the close, sell at the next open. If you'd have done this every day since 1993, you'd have actually returned 634.2%. So what does this mean? We know the market's been up since 1993. So what this really means is all the gains from the S&P have come in the after hours or the pre-market session and then have sold into the open. That's the difference. And that is why I do use this every day. I buy 10% position size each day at the close. I sell it first thing in the morning. You can see you can see the chart. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. There's a huge difference in return. This one up 634.2%. This one down 13.9%. So, with any trading approach, you want to find an edge. Well, there is an edge here. It's clear that there is an edge using this approach. At least there has been from 1993 up until now. It doesn't mean that in the future it's going to continue, but I would rather base my strategy off something that does backtest well. But you can see there are ups and downs with any trading approach. There's ups and downs, there's ebbs and flows, but over the long run, that edge plays out. So the most important takeaway here, everybody, is, find an edge. And it's not always going to work. There's going to be ups and downs, but there should be a positive slope to it over time. And in order for you to really let these edges play out for you, you have to be in this long term. So that's why we need to look at trading long term. We need to take small position sizes so we can stay in trades and let them play out for us. We can't just bet the farm and just run into a big downtrend like this. You have one guy that bet the farm here. He might be out of the game. You have one guy that started here with a small position size. Well, now he's up because he stayed in the game, and the guy that bet too much is out of the game. So with that being said, that is why I did buy the SPY. Very small gain. I did buy it here yesterday at the close at 298.13. Sold it this morning, 298.43. So not a big gain up. It's actually higher than where I sold it, but that's fine. That's the approach. Buy at the close, sell at the open, but I will take the small little 36-point gain overnight, and I will be buying this again today at the close. So I've been using this since February 26th, and it's done quite well. On an annualized return, it's about 11.5, close to 12% on an annualized return so far that I've been using it. And it's quite easy. It's quite easy, but it does have ups and downs. I mean, I remember in May, 80% of my trades were down, but like I said, I've been using it since February 26th, and I've done very, very well. So just like the chart I just showed you, seems about like what I've gone through. This was the month of May, and then we went up, and then we had some downs, up, up, up. So I will be buying SPY at the end of the day again. Hey Frank, how you doing? Frank says, hi Greg, still have half a position in OLLI and started a beat down trade on ZS, cost basis of 47.45. Okay, well listen, I will look at that when the market closes, and we'll go through that, check it out, and I'm happy to give you my opinion. So oh yeah, we talked about OLLI yesterday. Oh, I'm glad to hear that you sold half, because you had a huge gain in that yesterday. Now the whole world has changed that you've sold half, right? It feels a lot better probably. It gives you some room to breathe because you've locked in a nice profit. So, hey, Anthony, good to see you, my friend. Anthony says, hello and hi, Greg. I am long OXM from before I started following you. Earnings come out today and is it way into the overvalued area? Any suggestions? Okay, well, I can tell you this just right off the bat, me personally, and I'm not telling you what to do. I'm just giving you my opinion is, I don't like to hold through earnings. I feel like it really is a gamble, and looks like here you've had a really nice move up. This is a tough one, Anthony. Like I said, I don't want to tell you what to do. I'm just telling you personally what I do, and I do not risk going through earnings. Who knows? It might gap up 10% after earnings. So I don't want to tell you to sell it and then it goes up, right? But please remember it could gap down too, and especially we've had this huge big market going into earnings. A lot of times people are anticipating and it's being baked into the cake here. So cost basis of 45. My goodness. Oh, no. Sorry. I was looking up at Frank's there. We're almost up to the 6 ATR channel. We're definitely overvalued. We have earnings coming in. To me, it's clear what I would do, but, let me know what you're going to do. Anthony and I had a one-on-one call last night. Went really well, I think. And so I look forward to talking to you again tomorrow, Anthony. Okay. SSO. So I did buy SSO back here on the 6th of September. We had a 1050 EMA cross. That is why I bought it. I bought it when it was above the 1 ATR channel, so above value. So I did want to I did want to enter this trade, but because it was so high above the value zone, I only took a half position. So it's worked out fine so far. You can see did hit one profit target today here at 130.20. So as long as the 1050 stays in place, I will continue to stay in this trade. I will continue to phase out to the upside until I'm out of shares, or if the 10 crosses back below the 50, I will get out. That will be my line in the sand. That will be my signal to get out. But this one's worked out nicely as well. And then last position we have is XLF. I did buy XLF back here on the 28th of August. The previous day we closed under the 200. The day of the entry, it closed over the 200. Closed back in the value zone, which I liked as well. So I did take a full position here, completely mechanical trade. I'm staying in this as long as it goes my way, as long as and I've been phasing out this entire way. I will stay. I will continue to phase out as long as we're above the 200 until I run out of shares, or conversely, if we close back below the 200. You can see here's the 3 profit targets I have for today. Haven't quite hit one today yet, but who knows? With any luck, maybe we'll go up and we'll go up another 10 cents and hit one of those profit targets. I'm out of about... I'm out of about 75% of this trade at this point, because I've been phasing out. So anyway, no profit targets on there, but up today. So anyway, having a really good day today. I'm very, very happy with this. And we made up all the losses and plus some. I'm superstitious, but I think at this point, I have a very good chance of closing at a yearly high today in my account. So we'll have to see. I'm knocking on wood right now because I don't want to jinx it, but we'll see where we close. But that would be a good achievement to close at yearly highs today. So, all right. Hey, JT is here. Good to see you, my friend. Guys, hit the thumbs up. Hey, I think JT has a great suggestion. Thank you, JT. Yeah, hit the thumbs up if you like what you're learning here. I would appreciate it. Hey, Mount Doji, how you doing, buddy? Hope everyone is having a good day, week. Thanks. Thank you. Hey, interested to see what you did with McDonald's and Nike. So listen, this is the time where I like to do a little bit on trader psychology. This is from our friend Thomas Payne at Trader T Payne I think this is one of the best Twitter channels out there as far as trader psychology goes. I believe Thomas was a scientist turned trader, and he focuses a lot on putting trading psychology into perspective. So I really do appreciate it. And like I said at the beginning, trader psychology is the secret sauce. It's the difference whether or not you're going to be a profitable trader or a non-profitable trader. It's, managing your emotion, your mindset, how you view trading, how you put it in perspective, and basically staying stable, consistent, not deviating from your plan. That's why trader psychology is so important. But Thomas says, a casino doesn't need to know which cards will be dealt next in order to make money. It repeats its edge over and over, winning and losing with no concern over the uncertainty. This is how you must approach trading. Find your edge and don't be so needy. So yes, 100%. A casino has an edge. It's built in. It doesn't get upset or doesn't get too excited or too depressed after each hand that it wins or loses, because it knows in the long term that edge is going to play out. And it's the same thing with trading, everybody. If you, learn to trade correctly, you learn to find an edge, doesn't mean that edge is going to play out on the next hand or the next trade, but over the next 1,000 trades, it should play out, just like I was showing you with the edge of the overnight S&P. Yes, there are times where it doesn't win, but you can see over time the edge does play itself out. And that's what Thomas is talking about here. Don't get emotional about each trade. Don't feel like you have to make money on each trade. You're going to win, you're going to lose. It's just a natural part. But, these trades are random, and if you have an edge, eventually that edge will play out. So, don't get too excited when you win. Don't get too down when you lose. View each trade, like here at the casino, as one of the next 1,000 hands or one of the next 1,000 trades, and stay in this game long term. I mean, it's probably the best advice I can give anybody. Position size correctly so that any win or loss does not destabilize you, so that you can be in for the long term. Let the edge play out for the long term. And in addition to the edge playing out, it's going to keep you in the game, and it's going to help you develop your skills. But if you bet the farm on any one trade, and even if it's a great trade, you might lose it all. You're not going to have your edge play out, and you're not going to get the experience. So if you haven't subscribed to Thomas, please do, and read his stuff. I mean, it is really good, and it really does make sense. That's why I talk about it all the time. But Thomas at Trader T-Pain on Twitter. But thank you so much, Thomas, for this great post. Really spoke to me when I read it. So thanks, my friend. All right. Mount Doji says, I phased out of both MACD and Nike. I got out of Nike once it was denied by the 70 RSI. Good job. That was a really nice trade. That was a really nice trade you had. I was hoping that you would say that. Nice going, Mount Doji. All right. So, Steve says, don't bet the farm to try to win a cow. That is true. Isn't that true? I've never heard that before. That's perfect. Yeah. Don't bet the entire farm to win one little thing, right? All right. All right. Well, let's head down through here and see what's happening. So Apple having a huge day. Yesterday, this was the previous high over here. A couple days ago, we flirted with it, went back under. Yesterday, we were able to close back over, have a breakout. I couldn't buy this, unfortunately. It was too high. It was up to the second ATR channel. So, more times than not, you get up to these levels, you're going to probably move back down or sideways. But today we moved up strongly, and we moved up on strong volume. We closed above the third ATR channel. So the close over the third ATR channel is very bullish. Doesn't mean I can buy it here, but for people that have it, it's very bullish. So if any of you have Apple, congratulations. We've had a nice breakout to the upside, which is always positive. We're to 67.93 RSI, so it's going to be interesting to see when we get up to the 70 RSI how we react around that 70 RSI. But nothing on Apple for me today. Adobe up a little bit today. You know, we've had this long consolidation to this sideways consolidation. A couple days ago, we did break down. We had a little follow through. We're up a little bit today. You can see we did get back up into the ATR channel, but got rejected. So anytime you're under this one ATR channel, you are going to have some resistance above you. So for me to get interested in Adobe, I think the sweet spot on Adobe would be a close under the 200 back over. That would give us a good risk to reward ratio, or a close under the 30 back over the 30 would also give us a good risk to reward ratio buying this dip near the third ATR channel. And you know, as you guys know, prices, 90% of prices stay above the negative third ATR channel and under the positive third ATR channel. So if we can go under the third ATR channel back over, that will be a really good sign, and it will, more importantly, it will give us a good risk to reward ratio. Alternatively, if we had a 550 crossover to the upside, that would be a momentum signal that I might consider. So you know, sometimes when you have a stock, it has to go lower for you to buy it, or it has to go higher. Right now it's in purgatory, right? It's kind of in timeout, and there's a buyer strike going on. We do have earnings coming up again. I don't like to bet on earnings. Anything can happen. So nothing on Adobe today. AGQ has had this, we had this huge move up in silver. This is double leverage silver. We have come back down into the value zone. We have moved sidewards. This is what I'm looking for. The sidewards movement, the reason that's important is because we want to show that the supply has started to dry up. Here it went down, but kept going, so there was more supply. So we have moved sidewards nicely here. What I'm looking for now is looking for a V1, V2, since we're in the value zone, back up, possibly test the highs. Alternatively, if we had a 5 EMA cross back below the 20 EMA, cross below and then back over, I would also take that signal as well, but nothing there. AMD is down today, so nothing there. It's still holding within the channel. You know, if we had a V2 tomorrow, here's day one, day two washes out day one. If we had a V2 tomorrow, I would consider this because it's in the value zone, but nothing there today. Amazon's up a little bit today. Looks at the moment, it looks like it's rejecting the negative or the 1 ATR channel. So there's really nothing for me here today. I would need a 550 EMA cross back over in order for me to get interested. Let me see. I want to make sure I'm right with that one. Yeah, 550 SMA cross. So we'd have to wait for the 5 to cross back over the 50. So that's a long ways away, so we don't really have to look at that. I did buy Amazon back here on the 26th of August. We closed under, closed over, and my line in the sand was a 200-day. So any close below the 200, I would have got out, but I bought it here, and I phased all the way out to here, the 9.9. So that was a really nice trade, but I'm out of Amazon at the moment. Shoot, Boeing. Well, Boeing is very, very strong today. I was not expecting that. We were so close to the third ATR channel, but big up day on Boeing today. I can't buy it here. It's just too high. Looks like it probably came close to rejecting the 70 RSI. So anyway, Boeing shareholders very happy today, but nothing for me on Boeing. Alibaba, we're hanging right out at the 1 ATR channel, so we're just a little too high for me to get interested. I'd like it to come back down into the thick of the ATR channel and then look for some kind of V1, V2, possibly a rejection of the 50 RSI and then back over, or a rejection of the 20 EMA and back over V1, V2, but some kind of entry signal within the value zone, but it's not quite there yet. Caterpillar did break over the 200 yesterday, but was just too high for me to buy. It was at the 5th ATR channel. Now we're at the 6th ATR channel. It's very difficult to get prices to go above the 6th ATR channel. It happens, but not very often. So we're pretty high up there. So nothing there for me. Commodity index, you know, we broke out of the channel. I'd like to see this come into the channel. Look for a V1, V2. That would be a dip buy. DDM, of course, we've been riding this all the way up from here. One profit target today. Walt Disney, that was a bad trade for me yesterday. I bought it with the 1050 crossover. I bought half a position yesterday. It dumped right back down. I had to immediately get out. So nothing on Walt Disney. Etsy's a wild one. Etsy's a wild one. So what are we at? We're at a 45 RSI. It has had a nice move back off of the 30, but it's a 44, almost 45 RSI. It probably will run into some kind of resistance at the 50 RSI. So nothing on Etsy. What I'd really like to see on Etsy is, now that we made a low, we rally, we made a lower low, we have a bullish divergence. You know, the people that bought down here probably have their fingers on the trigger. If it stalls out, goes down, that will probably cause the price to go down a day or two. Then I'd like to look for a higher low V1 in the value zone. That would really be the place that I think would be the sweet spot. Ford, nothing on Ford today. Facebook, nothing on Facebook. 5 below is moving up nice. It's just too high for me. It's way above the 1 ATR channel. Gold. So listen, we had the 5 EMA cross below the 20 EMA. You know, the last time this happened, where we had the crossover, was way back here. And I did buy that. I actually bought that from here to here. It was a good trade, but that 5 stayed over the 20 the entire time. Now the 5 has crossed back below the 20. So now I'm looking for the 5 to cross back over the 20. And if I do, I will go back long gold, but nothing there now. Google, we talked about that. We bought that yesterday with the 1030 cross. It's moved up nicely, hit one profit target. Goldman Sachs, so 65.27 RSI. So we're at the high of the day here. So I know Steve had a really nice trade on this. Congratulations, Steve. That's a big monster. But I can't initiate a new position in that today. Wow, look at IBB. IBB finally took off. What I'm looking on for IBB, I'm looking for a crossover. I'm looking for a 5 crossing over the 30 EMA, but that's still a ways away. But if any of you have this, congratulations. It's moved up nicely, getting close to the 1 ATR channel. Might run out of some steam there. I don't know. Intel, great move up, just too high. Russell, congratulations, Steve. Steve did twice as good as this because he bought the UWM, which is the double leverage. So congratulations on that, Steve. Nice day. Johnson & Johnson, nice move up, nothing there. Coca-Cola. This is a V2. Here is day 1. Here is day 2. Day 2 washes out day 1. Looks like we are closing above day 1's close. The only problem with this here, I mean, we are in the value zone. We do have a valid V2, but we don't have any sideways movement. This concerns me. I'd like to have seen this come down, move sideways, and then have the spike down and reverse. This is, you know, the slope of this move is a little too strong for me to take this, so I'm going to pass on that. Lockheed Martin. No. MasterCard down again. Boy, MasterCard has been really had a couple tough days. You know, we bought this back here when it went under the 30, back over the 30, and tagged the 100. And we had a great trade from there up to here. I'd be looking for the same thing. I would be looking for some kind of rejection under, back over the 100-day moving average, have the bars narrow a little bit, have a V1, V2 around the 100 would be good, or a move down to the 30 RSI. That would be, I think, an excellent sweet spot to and offer us a good risk to reward ratio. Altria. Let me just check on this right here. Nothing on Altria today, up though. Merck's been crazy, just too volatile for me to do anything with here. Microsoft actually down today. That's surprising. You know, I might be interested in trying to pick up Microsoft. We have some good price action around the 100. Netflix, no, that turned out to be kind of an ugly trade. I did buy it here, did phase out a couple, and then it dumped when we had the Apple news yesterday, so I had to get out. But luckily, I had a half a position, and I took off about 30% of that half, but nothing there today. Nike, this is what we were talking about with Mount Doji. Mount Doji got out when it rejected the 70 RSI, which was probably up here someplace. So fantastic trade, Mount Doji. Proud of you. Philip Morris having a nice day today. You can see we're coming right up into the downward sloping -1 ATR channel, and that should act as some resistance, and it's exactly what happened, right? Hit that and got rejected. So nothing there. PayPal up a little bit. It did bounce off of the 200, but you know, I'm concerned. I'm concerned when we go below the 200, back over the 200, and you have huge bars in your very recent past. It concerns me because these huge bars here, really what that's saying is there's just a lot of selling, a huge amount of supply came into the market. People didn't want it, right? And if people didn't want it a couple days ago, then the chances of them wanting it when it goes back up is not that great either. I mean, it did bounce off the 200. You could have bought here, and just with the close below the 200, it would have given you a good risk to reward, that's for sure. But the context of the chart, I don't like this. So nothing on PayPal. The cues we have, of course, Snapchat. It's a V2. Here's day 1, day 2, day 3. Day 2 does wash out day 1. Looks like we are going to close above day 1, but you know, the rules on the V1s is the day 1 cannot be larger than 1 ATR. 1 ATR is from here to here, to here to here. See how big this bar is? This is larger than 1 ATR. It's almost 2 ATRs. So that's showing me in the very recent past there was a lot of supply coming into the market, so I don't want to get involved in Snapchat because of that reason. S&P, oops. S&P, we had that little overnight trade, little bit of profit, but I'm happy with it anyway. We'll be buying this again at the end of the day. Square, look at that, you know. I'm not going to buy this right now, but it is getting interesting. You know, we're moving sideways. We're creating this base. A couple of days ago, we went under the base, back over. Yesterday, we went under the base, back over. Now we're down into a new range, right? So these were false breakouts. This is a successful breakout, but what we have is we have a low, we have a rally, now we have a lower low. We had very deep MACD bars here. Now we have no MACD bars. So the momentum of this is running out, and we're to 3245 RSI. So I would be looking for possibly a close under the 30, back over the 30, or conversely, a valid V2 that maybe happens tomorrow and at the same time makes this a false breakout to the downside. So I am kind of interested in this, but I just don't think it's going to happen today. SSO, one profit target today, so happy with that. Bonds, boy, nothing on bonds. We'll have to see, you know, if we got a decent V1, V2 around the 50 or down here at the 30 RSI might be interesting also, but nothing on bonds today. Tesla, huge day. Looks like it's closing over the 3rd ATR channel. So if you have it, that's good, but you don't want to buy up there. So nothing on Tesla. Twitter, down slightly today. Looks like it's trying to hold the support here. This was the previous resistance. We broke out. Now this becomes support. In order for me to get interested in Twitter, and I have been interested, you can see it did reject the 3rd ATR channel 3 times. I'd like to see this come in the value zone. I'd like to see it stop going down. I'd like to see the bars narrow, go sidewards, attempt to spike down, reject, immediately go back the other way, give me a V1 or a V2. But nothing yet on Twitter. UNG, nothing there. UNH. So, I mean, you know, this is a decent V1. We're to 45.95 RSI. I would like it much better if it closed above the 50, but this is a valid V1. MACD did go positive. It's not bad. It's under the 100-day, but I'm concerned. See, we're at 45.80, 90. So most likely we're going to find some resistance at the 20, and we're going to find some resistance at the 50 RSI. So I'm just going to let this one go, but who knows what's going to happen. U.S. Oil's down today, back under the 200. It's really been battling the 200 a lot. The dollar gapped up, had a pretty decent day today, but nothing on the dollar. The VIX is, you know, if we get down here to this previous low, I may dip my toe back in the VIX. I've had pretty good success this year with the VIX. I did buy the VIX here on this V1 previous day. On this V2, we also went under the 30, back over the 30, under the 30 chart channel, back over. And this was, I think, the biggest trade I had for the year. And I haven't messed with it ever since. So, you know, if we get back into this range with this previous support, I might look at it again, but nothing here now. Verizon, very strong, nothing there. Walmart, down a little today, interestingly. Energy was up higher earlier, now down. Financials, come on, baby, get up there and let's hit one profit target at least today. Come on now. You only have 8 cents, you can do it. But this has been a wonderful trade for us from here all the way up to here. Real estate going down with the bonds going down makes interest rates higher. So, but we are in the thick of, you know, we've had a nice move up. I was waiting for it to come back down into the value zone. Now we're in the value zone. Now I want to see it move sideways. I want to see it stop going down. I want it to consolidate, look for a V1, V2. So, you know, we might be sitting up here shortly for this. 2 of the 3 check marks are checked right now. Utilities, V1 yesterday. It's moved up nice, nothing there. Healthcare. Did have that V1 yesterday, and it looks like it was would have been a good trade. It's just too high. It's just over the 1 ATR channel. I don't really like to take most trades over the 1 ATR channel. And pharmaceuticals, boy, it just keeps going up. So nothing there. So that being said, guys, I really did not see anything. But, you know, right now we have quite a lot of positions, right? I mean, we have the DDM, which is the double leverage Dow. So we're covered there. We have Google, right? Discretionary trade on Google. This is looking fine. One profit target. We have the Qs. So we have a whole index of technology. Of course, the SPY trade, we're going to buy that overnight. And then we have the SSO, which is the S&P, double leverage S&P. So we're covered there. And then we have financials. So we're really covered all over the place. I mean, I know we only have one individual stock, but, you know, 1, 2, 3, 4, 5, 6 positions. I mean, that's about the max. So, hey, listen, hold on one sec. I have to move my dog around. I apologize. She's psychic. She can read time, and she knows about 10 minutes to go. She makes her move. So I apologize. I'll be back in about 20 seconds. It's amazing how she literally can tell time. Yep. So, well, it looks like we're having a surge here at the end of the day. All right. Hey, Marco's here. Good to see you, Marco. Thanks for coming, my friend. I really appreciate it. Steve says, hi, Marco. Glad to see you here. Yes, me too. Hey, Murat. How you doing, buddy? Good to see you. That's our friend Murat from Norway. It's always great to have you here. So let's take a look here. So yeah, guys, I honestly did not see anything that I'm interested in buying today. And like I said, we're fully covered, you know, through all the indexes that we have. I mean, we do have Google. But I mean, everything that we look through today, I mean, nothing stuck out to me like, oh my gosh, I have to have this. And I guess it's a good teaching moment too. You know, if you can't find something that jumps off the screen at you, then you're fine. You don't need to have a position every day. You know, when I was studying one-on-one with Dr. Alexander Elder, the first thing he told me was, Greg, he said this in his Russian accent, but he sat me down. He goes, Greg, unless a setup jumps off the screen, grabs you by the face, shakes your head, if you don't get that kind of reaction from the setup, then it's probably not the right setup. So, I mean, it's a little bit of hyperbole, right? But he is correct. I mean, it really should jump off. It really should jump off the page at you and let you know it's a legitimate position. You know, the one that we were looking at was square. To be honest with you, this is the type of reaction that I had from here because we have this base here, right? This was the low, it held. And the very best bottoms that I have found, guys, are ones that move sideways, poke their head down real quick and immediately go back up. But you see how we have this base built here? What was the one that we were just looking at? Was it MasterCard? It was one that we just looked at where the slope, the move down was so strong. Oh, it was Coke. See, the move down's pretty strong here. Yes, we had a V1, but it didn't move sideways. Compared that to square. See this? How we have sideways. Now it poked its head down. That's not good, but if it can immediately poke its head back up after this sidewards movement, that's what I'm looking for. So tomorrow, you know, if today we did close above yesterday's low. So tomorrow, if we can close above yesterday's close, it would give us a nice valid V1. We would have rejected the low RSI. We would have come back in the range and MACD is positive. So all in all, this is the kind of reaction that I got from watching this. And you'll find when you trade after a long time, you'll just look at a chart. And of course, you know, you go through the steps and you look at the indicators and this and that. But when I look at a chart, you know, I explain everything to you guys. I go through it. But the second I look at it, I know immediately 90% of the time whether or not it's interesting or not, because you get a feeling. Do you know what I mean? You get a feeling where you just know that it looks like something. I don't know, Steve, if you experience that, but I'm sure that you do. But you can look immediately, and before you even have the time to try to explain it in your mind or you know, call it out what's going on, you just know. You just look at something and you just know, you know. And so that just comes from experience. Murat says, just bought Zanga. Is that the symbol, Murat? I like to look at it, but that seems like a long symbol. All right, what do we have? We have 3 minutes, and then we'll look with Frank. We'll look at his Ollie. Still have position, started a beat down trade on ZS. We need to look at ZS too. Okay. All right. Well, let's make sure we're okay here. So I'm not adding any new positions. Did phase out on DDM. One phase out on Google. One phase out on the Qs. Small little overnight trade on SPY. SSO, one phase out. XLF, not one phase out, but very, very close. All right. Okay, let me take a look there. So 65.5 times 65 is 98. All right, so we got a couple minutes left here. All I'm going to do, the only new position I'm going to take today, as you guys know, is going to be the SPY. XLF is trying to get up there. Come on now, 5 cents. You can do it. I believe in you. I believe in you, XLF. Oh, 4 cents. It's a trying. All right.
Order cancelled.
All right. So we did buy. The only new position today was S&P 300.25. Alrighty then. So our new overnight trade is going to be 300.25. So that was the only new signal for today. And I am happy to say, guys, I did hit a yearly high today in my account. So I'm very happy for that. All right. Well, listen, I'm going to go over your comments and questions. If you have any other questions or you need clarification on something, please let me know. I'm happy to answer. But just real quick before I get to the answers, I do want to just put in a quick plug for myself and let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. And I really do enjoy teaching. I've had really good success with my clients. You know, it all starts with just a free phone call. I just like to get to know you a little bit better, understand what your trading journey's been like, what your challenges are, how you trade, what your goals are, and then I'll put together a you know, customized lesson plan that you and I will work on one-on-one, you know, via Skype, and hopefully will help you achieve your trading goals and make you a better trader. So, you know, when we work here on the live stream, you're just hearing me talk, but you know, the advantage of the one-on-one is that, you know, there's back and forth between you and I. You know, as we get into the lessons, you know, I teach, but you know, I ask you, I ask a lot of feedback from you, breaking down charts, telling me what's good, telling me what's bad. Essentially, I just really want to know that you understand and that you know it. And if you have to teach back to me, you have to know it in order to teach back to me. So I think that's probably one of the main reasons that the one-on-one lessons are really helpful. And I did change my program around. It used to be just an hourly program, but I switched it to a 10-hour course, one-on-one course. And so there's 5 2-hour Skype sessions. And because it's more hours, the hourly rates reduced. So I think it's a pretty good deal. I really do think it's a good deal. It's, you know, for the money, I think it's a really good investment. So if you're interested, you know, and you want to set up that free, you know, half-hour phone call to get to know each other a little bit better, please just reach out to me on by email. It's in the description of this video, or you can reach out to me on Twitter. So, and then also, if you guys don't mind, if you would hit the thumbs up button, I really would appreciate it. It helps YouTube promote the channel out to more people. And there's a lot of people, honestly, guys, that need help with trading. And that's why I started this channel, was to help instill some good trading principles into people, you know, cutting your losses short, letting your winners run, identifying support and resistance levels, all the things that you need to do to make money in this game is what I'm trying to do for you guys. So if you could share it, I would really appreciate it, or hit the thumbs up button at least, I would appreciate that. So, all right, so that is enough of that. And so let me scroll back up. I want to take a look for Frank. So let's look at Ollie again. So I talked about Ollie yesterday And Frank had a great trade on this. I told him I was concerned about two areas. The 6610 level would be about the 50% fib from here to here. As you can see, it did almost challenge that today, but it did find some resistance. So, I think it did hold some meaning. The line up here, 7120, that would have been the 50 RSI. That would have actually also been kind of an area of concern. But I am glad, Frank, to hear that you sold half of your position. I mean, look, you bought it down here. You've made, I can't remember exactly where you bought it, but I mean, you've had a 15% return. You didn't get rid of the whole position, which is good. But if it were me, honestly, if it were me, now that you've sold half the position, if we close below the previous day's low, that would also be another red flag for me to possibly get out of the whole position. If it was me, you do what you want, right? If it continued to move up, as long as it continues to move up, fine, keep it. If it moves up, rejects the 50, if it were me, I would get out, or anywhere in between. If we have a close below the previous day's low, that would concern me as well. But congratulations on that great trade, Frank. So let's look at ZS. Zscaler. Ooh. So you entered a trade today, Frank, on ZS. Is that what you did? Is that what you mean by a beatdown trade? Just so I know what's happening here. So I'm going to assume that's what you did. Okay, well, listen, I guess better that you bought it here than if you gambled on earnings, right? Obviously, if you would have gambled on earnings, and this is why I don't like to gamble on earnings, guys. If you would have gambled on earnings, you would have lost 20% overnight, right? How's that? That's, that doesn't work out. Me personally, I mean, look, on the bright side, we did get to the 6-day TR channel. You guys know that, it's very difficult to get prices to get extended beyond the negative 6 ATR channel or the positive ATR 6 ATR channel to the upside, but it happens still. So, you just because it gets to the negative 6 ATR channel, you can't say, oh, that's the bottom. But look, we're at 1867 RSI. That's not good. I really don't like to buy anything under a 30 RSI. Some people use the 20 RSI the same way I use the 30 RSI. Under 20, they're out of it. Over 20, they're in it. I use under 30, I'm out. Over 30, I'm in it. But even if you use the 20 RSI, you're still under the 20 RSI. So I don't know. I guess the key question for you, Frank, is what's your plan for this trade? That's the real question. And do you have an answer for me? I mean, what's the plan? What are you going to do to the upside? And how are you going to manage this to the downside? What is going to be your stop? I would be really interested if you feel comfortable in sharing, how you would manage this trade, because it's out there, you know what I mean, and it might go right back up, and I hope that it does for you. But just remember, on any trade, guys, you got to have an if-then statement. If it goes up, I'm going to do this. If it's going to go down, I'm going to do that. So, the real question is here, Frank, is do you have a plan here? Do you know what you're going to do, or did you just buy it because it got beat up on today? And maybe you do have a plan, but please share it with me if you do. I'd feel more comfortable knowing that you have a plan and you're not just out there buying it because it was low. I'm not beating down on you about this, but I mean, it's just a good teaching example for everyone out there because I'm not sure what my plan would be on this trade, honestly. I mean, I guess my plan would be, maybe play it back up to the 30 RSI or a close below the previous day's low. But be interested to hear what you have to say, Frank. Anthony, what did you do with OXM? I don't know if earnings. Oh, yeah, earnings were they this morning or were they this afternoon? Are they this afternoon? So let me know what you did with that, Anthony. I'd really like to follow that. But for everyone out there, getting in front of earnings, just like we saw on ZS a minute ago with Frank's trade, or after he bought earnings. I mean, you can take a big hit by gambling through earnings. JT says, hit the thumbs up button. Thank you. Oh, I already went through these. Okay, that's okay. Maldochi says, hi, how you doing? He got out of McDonald's and Nike. Congratulations. Steve had the funny saying with don't bet the farm to try to win the cow. That is true. We said hello to Murray. Okay, Johnny, ZNGA. Thanks for that, Johnny. All right, so Murat bought Zanga. So, okay. What was your signal, Murat, on buying Zanga? I mean, listen, you're in the value zone. That's at least good, right? It's, if you would have bought it way up here above the value zone, that would have been concerning. So, buying in the value zone is good. I mean, we had this big day up. We had we had inside bar, this range, this bar's inside this range, this bar's still inside this range. So this does look like, it's starting to form, a pennant here or a flag. And I think knowing enough about Murat and how he trades, his on balance volume probably showed him a good indication, I would guess, right, Murat? I think. But MACD is positive and we are in the value zone. We're moving sidewards. And so maybe if his on balance volume indicator, maybe he's expecting a move up. I'm not sure, but I'd like to know your thoughts. I'd like to know your thoughts, Murat. And thanks Steve for that, Johnny. Steve Burt says, yes, good signals are obvious, not playing hide and seek. Yeah, they come right out. I mean, they just jump out at you. If you have to, get your ruler and your protractor and your black light and a crystal ball and place them all around your screen and try to make a chart look like it's something, then it's probably not something. It really should jump off the screen at you. Marco says, great, Greg, congratulations. Yes, thank you, Marco. Appreciate it. Yeah, I mean, it's always kind of a big deal to make a yearly high, right? I think so. So I am, I'm proud of that. And I hope you guys experience that as well. But thank you, Marco. Anthony says, lesson 1 went unbelievable. Can't say enough good things. Oh, well, thank you, Anthony. Yeah. Anthony and I had our first lesson last night over Skype. So, thank you very much, Anthony. I appreciate that. I try. I really do put a lot of effort and energy into these lessons because, the success of my students says, that's how I measure my success in teaching. I don't want to just churn people through, charge them money, and don't care how they do. That doesn't last very long. I want all of my students to be profitable, good traders that are happy with my lessons and will tell other people about it. I mean, that's the only way business works, right? I mean, you get what you want by helping people get what they want. So thank you, Anthony. I really, that was great. Appreciate that. Murat says, the reason I bought is OBV. Aha, I knew it. I knew it. I know, Murat. The reason I bought is OBV is building up even though the price came down. Okay, there you go. Since July. Plus Bollinger Band went inside Keltner channel. Oh, that's right. You do like that. So just thinking about that in my head real quick, I mean, that basically means that you're having sidewards movement and started moving parallel. Momentum turned plus on the plus V. Okay. All right. So yeah, I figured, big picture here, we are moving sideways. Murat says on balance, volume is building up positively. We have MACD crossover. Technically, we did have a V1 today. I mean, not a great one, but here is day 1. Here is day 2. Day 2 did wash out day 1. Day 3 did close above day 1's close. So anyway, I mean, it's kind of a weird V1, but what I do like is the big bar up here, and you see how we came down, closed below it, and now we're closing about halfway of this bar. So It did hold halfway this bar. So anyway, I hope that keeps going. And, obviously the key here is the plan. What's going to be your stop, what you're going to do to the upside. Merit target 7.45. Oh, okay. Let's see. Oh, that's a big target up there. Let's see. All right. Well, good. So, your risk to reward with your target of where it's at here, I'm sure that's going to be multiples to the upside compared to what. Yeah. I mean, look, if we look at it on the weekly, moving sideways inside the value zone on the weekly, sideways, 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 sideways. So, as I've told you guys before, whenever a price moves sideways for a long time, that is telling you it's going to have some kind of move in the future. We just don't know what direction and when it's going to happen, but I promise you it's going to happen because, if you look at any chart, what you have, this is probably not the best example because it's moved so sideways, but essentially what happens is with charts is you have sideways movements, then you had moves. You have sideways movements, then you have moves. And, so on Zynga, we are having sideways movements, so Merit's anticipating a move. Obviously, stop is 540. Okay, so yeah, I mean, stops down here. Looks like it's at support here. If we break support here, and the profit target's up to 754, so it's a monster risk to reward. If he's wrong, okay, he's wrong small, but if he hits his profit target, he's made many times to the upside what he would have risked on the downside, and that is proper trading. Right? That is the proper way to look at trading. Anthony, earnings come out this afternoon. I got out because if I'm going to follow your trading system, then that makes sense. Trust me, it was not easy. I want to do this right. All right. So the pressure's back on me now on this one. Let's see. What was the stock again, Anthony? OXM. Do we even dare? It's down 9%, buddy. It's down 9% after earnings. You glad you got out now? Did you hear what I said, Anthony? It's down 9% after hours. It's down $7 after hours. So it did save you 9%. Oh, thank God. I felt all obliged, or it was all on me. Thank God you got out. Oh, I'm so happy. Yeah, that paid for the course. Exactly. That paid for the course. Oh, I'm so glad it didn't go up. If it had gone up, it was still the right decision. It was still the right decision. But I've noticed, when you have a really big move into earnings, if it's really nonstop going in earnings, it's even a better idea to get out of earnings because a lot of that is being priced in. Oh, I'm so glad you got out. But let's read that. Let's read that again. I got out because if I'm going to follow your trading system, then that makes sense. Trust me, it was not easy. I want to do this right. I'm so glad to hear that. And that is the right way to trade, regardless of what the outcome was. It turned out it was the right decision, and I'm so glad. But, there's no faster way to lose money in the market than gambling through earnings, honestly. So thank God. Anthony said, I got out of Zynga as well because I wanted to start with a clean slate. Okay. Thanks, Ramble Ron. Not easy, but any success I've had in life is when I follow a system. Truer words never been said. Trust me, I've been trading forever. If I just look at a stock and want to make a quick move on something, never works. I mean, I guess it doesn't not never work, but it always works better when you follow a system. Always does. Good words of wisdom there, Anthony. Ramble says, and this is a good system. I'll be taking classes as well. Oh, that's great to hear, Ramble. That would be great to work with you. Anthony says, yes, it's on you. No worries. Paid for the course. Excellent exit, Johnny says. Yay! What's right is right. Yes, agreed. Still right decision. Thanks, Greg. It's nice to get confirmation. Zynga had a 5 EMA, 10 EMA crossover as well today. Oh, that's good. I don't usually look at 5 EMA, 10 EMA crossovers, but a crossover is always a good thing. Any type of crossover is a good thing. Oh man, I'm sweating now thinking about Anthony's getting out from his earnings. I felt like I had the position. Oh man, I am so glad. But even if it would have gone up, it would have still been the right decision. I mean, it's, I mean, let me pull up Google. You guys, let's look at Google. I mean, I would have given you the same advice right here and it would have gone up and you would have been, damn it, why did I listen to Greg? Well, it doesn't always work that way. There's been a lot of earnings announcements where we have gone, here's an earnings, there, opened up down here. So if you leave yourself open to go, maybe I'll stay in this earnings and maybe stay in that earnings, it's difficult because then you never know. You're always back and forth. You're always struggling with it. If you just, have a firm line in the sand and say, I don't gamble through earnings, and specifically use the word gamble because that's exactly what you're doing. If you really want to go to gamble, go to Vegas, get a free buffet and some shows, get some free drinks. At least you get something. You get nothing for gambling on earnings in the market. So we'll have to watch Zynga here in the future, but I do like this sidewards movement. I do like that it's in the value zone. Looks like we're close to having a 520 EMA cross, but MACD is positive. And like you said, Marit, your on balance volume is showing you indications too. And if we look at the weekly, what do I want in the weekly? When it's above value, I want it to come in the value zone. I want it to move sideways. It is moving sideways, right? So, if I was trading this off of the weekly, I would be looking for a V1, V2. I don't think we got one there. Let's look at the monthly. But, this is what Dr. Alexander Elders calls triple screen. You use 3 time frames, monthly, weekly, and daily in my case. Is the monthly in an uptrend? 100%. Big picture, 100% in an uptrend. One time frame down, we're down. Are we low? Yes. Is it a good low? Yes. A good low is still in the value zone. If it was way under, it would concern me. So in the larger time frame, we're in a nice uptrend. In the middle time frame, we are just a normal pullback into value. And then now you look for some kind of trigger on the daily. And I'm not sure what was your trigger the 510 EMA crossover, which is fine. I mean, whatever you decide is your trigger, right? And we did have a V2 today, so you could have used that. So for triple screen, this works well. Monthly up, weekly just the dip down into value, and then some kind of entry on the daily. Johnny says, love the channel. It is great to have a calm and sensible group and leader. Have a great day, Greg and all. Oh, thanks, Johnny. I appreciate that. Means a lot, my friend. Thank you for saying that. I try to be. I mean, there's so much, chaos in the market and people making lots of claims and people making lots of calls. I mean, I don't even think that way because trading so long, I just know that I don't know, right? I know that I do not know, but I make an educated guess, and if I'm wrong, I get out quick, and if I'm right, I have the open-mindedness to give it some room to grow. And at the end of the year, did I make more money on my winners than my losers? And most years I certainly do. But thanks, Johnny, appreciate that. And Anthony says, ultimately, it was my decision. I appreciate how much you care. That should prove to anyone here who is on the fence about joining your course that your heart is in the right place. Thank you. It is in the right place. I promise you guys, it is. I do want you to succeed. So thank you very much. There are a lot of scammers out there. There's a lot of people that just want to sell you stuff. They really don't care. They just want to move you through. And I promise that's not me. It's one of the reasons I started this too, because it felt like there was a void in there. I mean, there are some good teachers out there for sure. Certainly. I'm not saying they all are, but you have to be careful. But thank you for the kind words, Anthony. Appreciate that. Merritt says, no, it was the squeeze. The Bollinger Band moved into the Kelter. Okay. So that was the reason. Good. When I talk about V1s, V2s moving sidewards, I learned that from Kerry Lavorne. He actually calls that the squeeze play. So he used the word squeeze. It's exactly right. So he used the word squeeze as well. Okay. All right. So anyway, listen, anyone have any final questions for me? Let me know. So no new positions today other than the SPY, just the regular SPY trade again. But we have a nice mix. We have a nice mix of all the indexes. And so we only have one individual stock. That's rare. I mean, we have DDM crossover, DDM mechanical off the 200, Qs crossover 520, SSO crossover 1050, XLF close back over the 200. This is probably the first time in a year that I've had this many index positions open and so few individual stocks. Merritt says, I tried to buy yesterday. For some reason, I messed up in the last minute, so I paid 5 more cents today. Oh, well. Well, we're going to be watching that one for sure. And I really hope that goes up for you, bud. Looks good for sure. Hey, John, good to see you. Thank you for coming by as always. I always like when John's here. He always has some interesting stocks for me to look at. I like seeing these stocks that I never really look at. I have no idea what they are, so it's kind of fun for me to look at these as well. Johnny says, I put in a few small underpriced orders to see if the day traders are desperate enough to sell in the after hours. Aha. So you're bottom fishing after hours. That's the thing with after hours trades. The bids and the asks get so far apart. But I would say most of the time, if somebody is selling to you at the bid in the after hours, you got a super good price. All right, let me take a look. Wow, what a great trade for Steve today on UWM. UWM is the double leveraged IWM, and he bought that based upon the UWM closing above the 200-day, and he had a monster 4.24. Congratulations. That takes care of all that Disney nonsense that we had yesterday, Steve. So OXM is now almost down 10%. Man, am I glad you got out of that, Anthony. I'm so stoked that you got out of that. Woo! All right. All right, well, JT says, question on Interactive Brokers. I hesitate to open an account with them since they are online. How safe is it? Well, JT, that's a good question. I think I mentioned the other day, more mutual funds, more hedge funds use Interactive Brokers as their broker than anyone else. And these are hedge funds with hundreds of millions, if not billions of dollars that they trust with Interactive Brokers. I mean, I don't get paid for Interactive Brokers or anything like that. I don't have any deal with them. It's just who I use because I feel like they're the best. They have a lot of security things like you can't log into your account unless you have like this card and you have to punch it in and have a number. So I think it would be very difficult to get in because they are big on security that way. But I also believe they have some kind of something they offer where, they guarantee your account up to $1 million. But it's something you would have to talk to them about. But I understand, I completely understand your concern. But I guess that would be the same with like anyone, right? Because, Schwab or Merrill Lynch, they're all online as well. But I do understand your concern and you have to feel comfortable with it. But they do have some safety measures. And like I said, more hedge funds than anyone in the country place their money at Interactive Brokers. So, if I were you and you were interested, I would call them up and, talk to them about your concerns about what safety measures they have. But one of the nice things too is, like I said, they do pay 1.8% on the money that you don't use in your account. But I do understand, JT, and you have to be comfortable with what you're doing. And if you feel more comfortable using a broker that you call, then that's what you should do. Anthony says, we will always remember OXM. Yes, I will, for sure. So I hope that helps JT. The other side to that is, I was actually talking with Anthony about this, but if you're paying $5-6 a trade, you are really going to have a tough time making money trading with any kind of small account. I can't remember the numbers, what I was telling Anthony, but I think I looked at my account. I think I've paid close to $2,700 this year in commissions, and that is at $1 a commission, right? If you were at Charles Schwab and paying $5 a commission, you would have paid $13,500. That would have taken a lot out of your profits for the year. So it is important. I'm telling you, it's very important to keep your commissions low, JT. JT says, but TD and Schwab have an office here in Los Angeles. Oh, I see. Yeah, I see. Well, you're going to have to make that decision. And look, and if you don't go with the Interactive Brokers, talk to Schwab and say, look, I want a reduction in my commissions. They'll do it. They won't do it happily, but they'll do it. I promise you. I mean, I was with Schwab for a while, and I had them get it from $4.95 down to $3.95. Just by asking. Yeah, TD Ameritrade $6.95. I honestly don't see how you make money when you pay $6.95 a commission, especially if you're phasing out. Like if you have one entry, one exit, fine. But if you phase out like I do, there's no way it's going to work at $6.95. But all right, everybody. Well, listen, I'm going to go hiking in the mountains and maybe listen to some podcasts, something. So anyway, appreciate everybody coming by today. Anthony, good seeing you, my friend, and look forward to speaking to you tomorrow with you at 6:30 Mountain Standard, and we will get back on to our lessons. JT, good seeing you. Appreciate you coming as always. Johnny, it's always great to see you. John, nice seeing you. Thanks for your input. Murray, let's watch that Zynga trade. Great to have you here. Ramble Ron, good to see you, man. I always like when Ramble's here. I like that name, Ramble Ron. So hope you're doing well. And Marco, great having you here. Thank you so much for participating and saying hi. Steve Burns, always an honor, my friend. It's always great to have you here. Congratulations on such a great day today. And thanks again for including me in your newsletter with your little mention. That was a great surprise. I was literally laying there kind of half asleep watching, and I saw, I'm like, what's happening? Am I dreaming? So that was great. But congratulations on your great day today. Mount Doji, good seeing you, my friend. Nice trading on your Nike and on your McDonald's. And Frank, I hope that helped on the OLLI. And let me know what you're doing with that. I'd be interested in. I'd really like to see what you're doing with that ZS. And hopefully you can tell me what your trading plan is for that. And hey, what's Larry doing? Good to see you. Thanks for coming. But yeah, I did get out of Disney yesterday for a loss actually. And I think I've covered everybody. I hope I did. So, all right. You guys have a great night as well, and hopefully see you all tomorrow. And if you have any questions you didn't think of today, feel free. You can email them to me or send me a message on Twitter. All right, so take care, and see you guys tomorrow, hopefully. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.